Thanks for coming back to the latest episode of the Credit Clubhouse. We are your one-stop shop for all things credit. Before we jump into our next episode, we have an exclusive offer for our listeners. If you're interested in attending any of our conferences throughout the year, we have a great deal for you. Just head to www.dealcatalyst.io, pick the event you want to attend, and enter the promo code CREDIT at checkout. This will give you 10% off any ticket to any conference. As always, don't forget to follow the show, rate us, and leave a review. We encourage your feedback. It'll help us make these episodes a better listen for you. And now, on to our next episode. Welcome back to our latest installment of the Credit Clubhouse. As always, I'm your host, Todd Anderson, Head of Content and Programming at Deal Catalyst. Joining me today is Luke Voiles, CEO of Pipe. Pipe is the modern capital platform known for fast, frictionless, and dilution-free funding. Luke, great to see you. How are you today?
I'm doing great. Thanks for having me. This should be fun.
Of course. Well, it's good to see you. It's been a little while since we've last seen one another. So for the audience who might not know you as well as I do, what is Pipe? What is the type of financing you offer to SMBs, and kind of who is the, I guess, core Pipe customer?
Yeah, our mission is to empower financial freedom for small businesses through open, accessible, and unbiased financial services products, right? The first offering we started with helped solve the number one pain point for small businesses, which is access to capital, right? So fundamentally, our product is the same as Square Capital, Stripe Capital, PayPal Working Capital, Toast Capital, Shopify Capital. It is an in the flow of money cash advance product, right? And so it just allows you to narrow the risk problem and get into the flow of the money to makes for a better risk setup. It lets you really help the underserved micro merchants that just don't have access to capital anywhere else, right? It could be the nail salon owner that has like immigrant female, no FICO score, and she can still get a pre-approved offer from Pipe that she's 98.7% likely to be final approved on when she comes through, right? It's just a pretty powerful offering. And we basically, the way we acquire customer, actually go to market, is a B2B2B approach. Right. That's the other critical component here. So the same way that Affirm does B2B2C and has done 9 billion in volume to consumers through Shopify partnership, right? Pipe partners with SaaS verticals that serve small businesses. And we allow those SaaS vertical offerings to offer capital to their customers powered by Pipe, right? So deeply, just an embedded version of these kind of modern, like I would call it the like lending 3.0. That's the kind of the future, I think, of small business lending.
So ultimately, it sounds like, you're a lender, you're in the payments kind of ecosystem, card issuer. I mean, what is the Pipe vision for, say, 2 years from now, 3 years from now? Kind of what do you want the platform to ultimately look like?
Our roadmap will be defined by the underlying customer pain points, right? And I'll just say it, my roadmap's been the same since I got to Intuit 8.5 years ago, right? Like the underlying small business pain points of the QuickBooks customers are the same as the pain points of the Square customers that we serve on the Square banking side, right? There's just a list of needs, and the number one pain point is access to capital. And so we've like doing pretty well on solving that problem right now. The number two pain point is spend management, right? And like card spend plus bill pay and like invoice spend, right? How do you make that just super seamless and easy? There's a massive gap in the market right now for micro merchants. Like if you think about card offerings, like Brex and Ramp have awesome products, right? We use Ramp at Pipe. They just can't serve any business that has less than, call it 100,000 in cash in their bank account, right? You look at Brex's securitizations and the average cash in the bank account is like 230,000, right? And so that's a pretty easy credit underwrite to say, hey, I'll let you spend 50 grand a month as long as you have enough cash in your bank account to like cover it by 4 or 5x, right? That's pretty easy. The challenge of the micro merchant population is very different. The underwrite is hard. Like Capital One and Amex even, I'll call them out too. Like they're a FICO based underwrite on this population. And so less than 720 FICO is tough for them. And so many of these micro merchants, think about the 33 million small businesses in the US. most of them, like way more than most of them, like 90% of them are these micro merchants that just can't be served by anybody else. So I'm super excited about taking our risk engine, which is a multi-draw like line of credit like offering to help power our new card offering that's coming very quickly. So we're actually doing an acquisition right now that may be announced before this goes live on the account payable automation side. So Pipe will have a full spend management suite, card spend, invoice, like data, like AI data extraction of the invoices, historical tracking, like changes in those invoices, getting the data back into QuickBooks. Just a magical experience that the small businesses, those micro merchants just don't have access to yet. So that's the one we're working on right now. So that's our second product. We have a menu of other embedded financial services that we're going to decide what to build next, right? Payroll is on our road, like on our, like a longer term roadmap. Like auto savings for tax and other banking features can be interesting. That was a very popular feature for Square checking, for example, and Square like debit card. People wanted to like create a savings folder or envelope and automatically save some of every transaction to pay their taxes. And because we have the engine built to get paid back by holding some of future transactions, we can actually set up savings folders too. So there's just natural secondary use cases that make sense for us. I think that one of the other areas that I'm most excited about right now is using AI agents to actually optimize our efficiency on our internal operational flows, right? So there are four categories in a lending business or in a cash like advance type business. Number one is sales. Like people come in, they're not sure they understand how the product works. They're in the application flow. We should have AI agents on the smaller like advanced offers to say, hey, like this is how it works. It really is just 3 clicks, pretty easy to get through. And this is how the payments work. A lot of folks just want to hold somebody's hand and say, hey, like help me understand this before they submit and say, yes, I want it. And so we'll have AI on top of that. The challenge there though is the regulatory, right? It's UDAP could be a major problem. You can't have the agent optimize for conversion and say, hey, maybe you don't have to pay this back. Right? Like that's a problem. So you really need like 3 lines of compliance defense on any AI agent you have interacting with your customers. So that's the first one. Then you have onboarding. Any payments or credit business has to onboard customers. Like, yes, Pipe is 100% automated from a risk perspective. Like the risk decision is done before the customer comes in, before they even see that pre-approved offer, because we have all the historical payments data from the partner. Yeah. The challenge though is when they come in, we have to do identity. We have to do know your customer, know your business, like the BSA policy. We have to make sure that there's no anti-money laundering like issues or money laundering issues, right? And so we still have a big portion of manual review to say, hey, you fat fingered your DBA, you use your DBA instead of your business name, you use your personal address maybe instead of your business address. Something doesn't line up with like the LexisNexis data we're pulling from the Secretary of State, but there's little interactions of like a human having to reach out to double check it, figure out what it is, get it back into the decision service in an automatic way. Like we should have an agent that can do that and just go gather the information, put it back in the decision service and move on. That's a major problem for anybody in the payment space. And if Pipe can figure out how to put the right controls around that and apply the right BSA policy and do it in a way that's compliant, that's another product we could sell from a SaaS perspective, right? Customer success is another one. You got to worry about Reg E on that one. And then the last one is collections, like to have very friendly AI collections agents that can nudge folks to come back in and actually continue to make payments, but under the 50 state licensing or rules that you need to deal with in the US at least, right? And we're going to be global too, right? So yeah, that's the other big pusher. So like, I guess I'm most excited about using AI agents for operational efficiency, but then then you take that AI stack that we productionalized already and apply it to the small business pain points, like booking appointments, like managing inventory, like all of what SaaS vertical like is solving now for each specific industry, like Toast did for restaurants and Slice does for pizza shops, which is even more narrow. Like there will be agents popping up inside those verticals, and eventually it's just going to be agents. There's not like SaaS vertical will be displaced in 10 years by AI agents, and Pipe should be able to embed directly into the agents and monetize with the financial services where the agents, I think, will just be free, honestly. So that's the future we're solving for. Like, how do we position Pipe to serve all these small business owners with whatever tools they're using, whether it's SaaS vertical or actually just a bunch of AI agents, a handful of AI agents to run like appointment booking, taking payments, inventory, selling online. They could have 4 or 5 agents run their whole business for them.
So you've been there for, I think it's about 2 years now. Are the motivations that made you join in the first place sound like there's still the motivations today? And what's been kind of the I guess, the biggest surprise you've learned since taking over?
This so coming into Pipe, I had a pretty solid view from a strategic perspective on kind of what works in this space and how to do it, right? Like it was so like the product that I thought worked the best clearly was Square Capital, right? I came from Square with the GM of Square Banking. We did 5 billion a year in loan volume to 120,000 small businesses like a 7,000 average advance size, right? And we could
Yeah.
sell whole loans. Like the risk, like the capital markets existed and still does to buy these whole loans. You originate in the morning and you could sell it in the afternoon for a 6 or 7 point gain on sale. Like to get to a balance sheet light small business, like that's you have to get to balance sheet light to actually scale these things, right?
Yeah.
That's what like the advice I got from Hans Morris, and I've said this before, but Hans Morris is Nike Partners now, but he was like president at Visa, CFO at Citi. He's like, I won't invest in another lending business unless it was a balance sheet light, like lending business. It has to get to a place where like you don't need massive warehouses and balance sheet because you just won't get the multiple on it, right? And so you think about all these things, okay, like, is it possible to get to a balance sheet light small business lender? And the answer is yes. Like Square Capital does it, PayPal Working Capital, Stripe Capital, they're all the same product. Toast, Shopify, I said it before, but like that's the thing we have to do. And then you think, okay, well, how the heck do we acquire customers? Because at Intuit, I was there 5 years. We built QuickBooks Capital. We got from 0 to 2.4 billion a year in volume. But we had all the customers and we had all the data.
Yeah.
Same thing at Square. We had all the customers, we had all the data, and they're constantly coming back into the product to do stuff, to complete tasks, right? And make stuff happen. And so those are like very rare scenarios, right? So at Pipe, like we can't go direct. Like we're not going to take the approach that On Deck did back in the day when they were public, right? Which was spending 40% of their revenue to acquire customers out directly, because the risk is not great that way either, because fraud can be a problem. But so then you learn from the others out in the space. And you think, okay, this is great. Like a firm doing B2B to C, they've proven that works. Like let's do B2B to B. Let's go find the verticals, like SaaS vertical businesses that are serving hundreds of thousands, if not millions of small business customers. And then we allow them to then offer capital and we pay a rev share to those partners, right? They can boost their EBITDA by 5 points without taking any regulatory or like credit risk, because it truly is Pipe capital as a service. So it's compelling because those businesses may only have 10 points of EBITDA right now. And if you give them 5 more, that's a 50% increase in EBITDA, right? It's pretty compelling for most of our partners, right? And so like that was the original thesis. Like let's recreate a Square Capital like offering, make it embeddable, do B2B to B, and then just scale it. And it's working. And so everything is sort of checked out. So you asked about like what's my biggest surprise. I think the like enterprise sales and like landing partners just took a little longer than I would have expected, right? So it's taking us like 12 months to land the largest partners, like 6 to 9 to land some of the smaller ones. And you have to just start, like you have to be like very focused on the first steps of the funnel. Like how many folks are we talking to? How many they're making to the next step? Keep moving forward. Like that's just not, the enterprise sales motion was just not in my DNA from before. So it's something I've been learning. But like that's, I mean, the other, like one other, not really a surprise, but like the Intuit, the Intuit mission-based leadership playbook just works. Right. It's like we're here to help these small businesses succeed. Everyone at Pipe is here to do the same. Like Intuit spits out CEOs constantly because that leadership playbook is so good. Like Alex Chris is the CEO at PayPal now, right? He hired me at Intuit and I learned a lot watching him, watching Brad Smith and Sasan lead, like really like Scott Cook DNA. Like that playbook just works. And then the other thing is like the way Square Capital and like really Square and Block are able to build stuff fast and have high product velocity. Like that's the other learning for me is like that setup just works. Like use the leadership playbook of Intuit, use the how to build stuff fast playbook that frankly is not just Square Block. It's Amazon style single threaded leadership. Alyssa Henry was running Square when I got there, and like that's the playbook, and we're running that playbook here as well. So the right mission based leadership, the right how to build stuff fast. And like just learning as fast as you can on the things that you don't have expertise on, and bringing people in like on my leadership team that know this stuff and understand this stuff better than I do is the best way to do it.
Can you talk about some of the capital partners you work with, in terms of where some of this funding comes from, What about capital markets? How, accessible, and how interested are institutional investors in these loans? What are kind of some of the questions that you're getting from institutional investors?
Yeah, I mean, this is a known product. Like that's the other thing. When you go into a capital type business, you don't want to create a new thing because then the capital markets won't understand what it is. But fundamentally, this is the same thing that they're used to seeing from Square, from PayPal, from Stripe, as I've said. Like they know this product, and we created effectively the same product. And so that helps, that goes like, that's everything, right? It's just, we're originating more of the same risk that they're used to, right? And so we have, like, it's public, like Victory Park has given us 100 that can be upsized to 200 million. We have a group of banks out of Texas led by KSD, that is another 200 million, right? And we actually have interesting setups where if we give deposits back to that bank group, we can get a discount on our rate. Right. And so we're able to like create very interesting structures to go like and as you know, like very well, probably with the folks on the show, there is so much money in private credit right now chasing
Oh
deals
yeah.
that the yields have tightened dramatically. Like going from like the SF Vegas conference, the yields for this product were in the like 12 to 13% IRR range, and now they're down to like less than 10 in like the last few months because there's so many people are trying to deploy capital. They know this risk is good, so the risk gets bid back down to like a 9 IRR. They could lever it up to like a 14 or 15, but there's so much demand. Like at Square, insurance companies were buying directly, right? And
Yeah.
so the insurance companies can get a Kroll rating and start buying. Like it just changes the depth of market, right? So from my perspective, there is unlimited demand for this risk if we can generate it, right? There are large buyers that will back up the truck on this stuff as long as you have the right, like if you've dialed it in exactly the right way and have proven like 18 to 24 months of history, like whole loan sales are relatively easy, right? And we're moving toward whole loan sale now because we have that history now.
What about future loan products, getting into different areas of the market? How do you think about, potentially expanding from where you are now into these other products that, might expand your customer base, and maybe you're competing with, some of the other, lenders that you've mentioned, but maybe on a different type of product than, kind of where the sweet spot is now? Or is the plan just to kind of continue to scale up where you've been?
It's interesting. So we ended up I can use the Square as an example. Like we ended up in a spot at Square where we'd saturated the US capital business. And so if you have that one product that's pretty narrow and you're growing just as fast as the Square US business was growing, the way to increase growth is two ways. Like one is to go international with the same product, or two, create new products and maybe take them up market, right? Because this is the farthest down market product that I think exists for small business. And so like I have that in the back of my head. We're actually doing that, like go international first, right? So we're already live in the US, UK, Canada. We're about to launch in Australia. We have very large partners that are asking us to go into Germany, France, Spain, and Japan, right? And so like we did like at Square Capital, we did US, UK, Canada, Australia, and Japan, right? These products work in all these places. And so from an international perspective, we can drive enormous growth by going to where our partners have customers, right? And so like that's the biggest lever I see. And it makes us super attractive to these largest partners that are serving businesses all over the world. They don't have to go get a money movement partner and an onboarding partner and a capital partner and a payments partner, issuing, acquiring. Like you do that in 10 geos, you end up with 50 partners, right?
Yeah.
And so Pipe will show up as the one partner you need to go do this capital offering globally with the exact same experience and consistency for you to make it easy to go global with. Like that's our like next goal is let's just go global as fast as we can and make it happen. And we can do that because we have money movement partners that are already in all these markets, right? So we have like single integrations that can get us money movement in every geo we need to go into in the next 5 years, right? It makes it super fast. Like the modularization of fintech is making it super fast for us to go into these international markets. So that's one piece. The other one, like I talked about already, on the capital side, I don't see the product changing much. Like we already have a very unique thing. Our product is multi-draw, right? That's unique. Like nobody else has a multi-draw cash advance product. So the way these products work is that half of people will generally pay you back faster and half of people will pay you back slower. The slow payers get a huge advantage, right? They're only going to pay you 10% of whatever their revenue is every day. And if they have half the revenue next year, it'll take 2 years for them to pay you back. So they get automatic relief. Normally with products like this, the fast payers are subsidizing the slow payers because nobody discounts the fee. Pipe has the ability to cap APR, right? So if you pay back like a 13-point fee you'd expect to pay normally in 12 months and have like a high teens APR. If they pay back in a month, it could be 800% APR. So we actually forgive fee.
Yeah.
So you never get into that world where, I mean, the example is I think Senator Sherrod Brown sent a letter to DoorDash saying, why are you doing 800% MCAs? Because our competitors don't know how to cap. They can't cap. They pitch term loan products and other stuff to try to get around it. But this can be an unfriendly product if you don't structure it the right way. And Pipe, strongly believe, has the first truly friendly version of what really is a merchant cash advance product from a legal perspective. But from the customer's perspective, just feels like a security blanket. They can draw it whenever they want. If they're pre-approved for 100, they can borrow 10 today and then borrow 10 tomorrow and 10 the next day. Each draw is an individual MCA that we could sell in whole loan form to the capital markets, right? So they get even more diversification when they buy this way. So we solve for each of these constituents. And it just works, right? So the first truly friendly version of this product that helps the slow payers, caps the fast payers, is an amazing product. I think it's better than a term loan because with a term loan, if you have low revenue, you still have to make that monthly payment.
Yeah.
And it can be really challenging for you. With a line of credit, they usually revolve. And like the way Max Levchin like talks about credit cards, I agree with him. Like if you just get stuck in revolving land forever, you'll never pay it down. And it's just not a good position to be in, especially with these super small businesses that are very consumer-like, because each draw has an amortization schedule that will be paid down. It really just enforces good behavior and like helps you pay down your debt at a cost you understand. And it just makes sense, right? And so because we get the best of line of credit and like it's better than term loan, I don't know that we go launch the true line of credit or true term loan product. I think we just give longer terms and charge lower fees, but have that same hold rate payment mechanism and the same cap on the fast payers. And you can actually take this product up market for the first time. Nobody's done it yet. And so that's what I'd like to do. We do have, so like that's the capital side. The place where we are innovating is the charge card. Like the reason why our charge card offering is going to work with our full account payable spend management solution is this multi-draw thing, right? Imagine a coffee shop that's pre-approved for 100,000 in capital on the like the line of credit like thing. They'll get 20,000 of pre-approved spend on the card. 30 days to spend. They get 30 days of free float. At the end of 30 days, they got to pay us off in cash, right? If they can't pay us in cash, they can draw their line to pay us down and then keep spending, right? So this credit backstop we have will be the thing that powers this card offering for the first time. So we will have the Brex or ramp for micro merchants that nobody else has been able to figure out yet because of this multi-draw experience. And it is friendly because of the features I described, right? So like I think this, like I'm all in on this card offering now and spend management offerings. It really solves the pain points of the small businesses. So number one and number two pain points solved, right? That's where I'm most excited. I think like payrolls on our radar. It's just really hard to convert customers. You get 2 shots a year. I led the platform that at Intuit that paid 16 million workers. And so like if you catch them early, like you can scale with them, but to get people to switch later is really, really difficult. And so I'm not sure that we'll go big on that business or not. But like the sky's the limit on the AI features too. Like that's the other part I'm excited about. But again, our wedge and our monetization engine is just the capital offering, right? It allows us to monetize card. It allows us to monetize the core product. And because we have that monetization engine, we can invest in the AI R&D on the vertical stuff, right? It's pretty cool.
And what's your biggest worry? What kind of keeps you up at night? Is part of it regulatory that, you were mentioning with the, the AI agents, regulatory, expansion, around the globe and, how some might understand the product fully, some might not. I mean, where's the things that kind of keep you up at night?
I mean, I think that we're really good at executing in highly regulated, highly risky spaces. Like this is the hardest thing. I was a distressed credit guy for a decade, right? I was at Sixth Street Partners for 5 years, Lone Star Funds before that, right? And Highland Capital Management when its credit hedge funds blew up, right? And so like I've seen every type of loan, like bought every kind of loan you can imagine from banks, like across small business and consumer and all the other special sit stuff you can imagine, both corporate and asset backed. So like that's always in the back of my head. Like it doesn't keep me up at night because I know we're doing a good job. Like, yes, something like a COVID could come along again and be really problematic. But if you're able to have e-commerce as like half your
Yeah.
portfolio, it helps you diversify against stuff like that. So you can actually build a very diversified portfolio and feel pretty good. The more non-capital revenue we have, the safer that gets and the higher our multiple could get. Like that's why I'm so excited about like selling like that AI onboarding agent. If we can figure it out, you could sell to banks and say, hey, we'll charge you 5 cents every time it automatically onboards a customer for you. And you end up with more stable like cash flow streams outside of just the capital offering. And so I'm going to have a hard time sleeping at night until we get to like 25-40% like non-risk based, non-risk type revenue, because that means our multiple will be way higher. Growth is always the thing. I want to grow this thing as fast as possible. And so like adding more partners, I spend most of my time now focused on like just talking to the CEOs and exec teams of other potential partners of ours, explaining why our product is just way better than everybody else's in the market and why you should work with us to go faster, right? Scaling in like eight geos at once, like doing 4 right now and adding 4 more in the early part of 2026. We have to just execute flawlessly to make that happen. Like putting the right squads on the ground in each market, like one like ops/compliance leader, one sales leader, like customer success type person, and one product marketing manager in each market to help go. But with the core team still like based all over the place really, but like the core squads are still running the capital product. They're just like rolling it out in each geo, right? So for me, making sure you can keep the wheels on the bus with a credit offering, and still scaling rapidly in multiple geos. It's like, I don't think anybody's done it before. We're going to do it and it's working so far, right?
What about, one thing I just thought of, and I was talking to someone else earlier this week about it, is, you have new administration comes in, they gut something like the CFPB, and clearly they're, obviously consumer focused, but a lot of these micro businesses are, you mentioned FICO scores. They're essentially underwriting slash, a consumer slash small business. Is there a worry that, kind of more predatory products come in the market or undercut some of what you guys do? And then all of a sudden some of the businesses go there because it seems like some products are too good to be true. And then it just brings either further scrutiny or just bad actors in the space and kind of screws up some of what you guys have built, which is clearly the correct way to do it. But, is there some risk there with what you're seeing in terms of, some of the regulatory burden being lifted, but then does that allow for, more predator type products coming in the space?
It's interesting. Like, I don't think that whoever's in charge in DC matters on this. Like,
Okay.
you should be doing the right thing. Like, there's always going to be bad guys and bad actors out there taking advantage. The history of the MCA space is loaded with it. Like
Yeah.
ISOs doubling fees and like making it like 200% APR products. Like we have to educate folks that look, like this is not the same as that old MCA stuff. It's this new thing that's multi-draw with capped APRs and is super friendly. Like it's a pretty amazing, unique thing. And that education is hard, right? Like everything I do at Pipe and our team does at Pipe, like we have to be very comfortable, like sitting in front of Congress and explaining like how this thing is actually really good for small businesses. I'm so happy to come to work every day knowing that the product that we built is very good for small businesses and opens up access to capital for businesses who've never had access before, right? And so as long as you have that right mindset, and yes, regulatory can shift and change, but we have an unbelievable chief legal officer who like helped Apple launch Apple Pay and Klarna get into the US and Square get the charter. Like we just have the right expertise internally to make sure we execute the exact right way. Our chief risk officer, like he was at Amex for 14 years and at Funding Circle for 7, right? We just have the right people in every seat to just execute flawlessly. So that part, even with regulatory shifts and changes, like, yeah, maybe you'll have less like pressure in an exam from a specific state or from a specific regulator, but the rules don't go away. Like UDAP still exists, whether the CFPB or the FTC enforces it, it doesn't matter. Like you can't lie to your customers, right? And there's always going to be a bad guy out there, right? And so I think that if we just keep doing the right thing and keep educating, like we're a member of the Financial Technology Association, Penny, like organization that Penny Lee runs. we constantly are like, I fly out once a year to DC to go tell this story of fintech for good alongside Stripe and PayPal and Intuit and Square and all the other companies that are trying to do good for these small businesses and consumers, right? We just have to tell the story of fintech for good consistently. And I think people will realize that we're helping. And it really doesn't matter who's in charge or what's shifting or whether the CFPB has a ton of resources or not. Like, you still got to follow the law. It doesn't matter, right?
So we have just a few minutes left. I'd like to end a little bit lighter. Favorite sports team or hobby?
I'm a cyclist, right? So I used to play soccer, but now I bike. And so when I was working at Sixth Street Partners, it was part of TPG Capital. I would ride my bike to the financial district across the Golden Gate Bridge like twice a day, like riding in the dark both ways because I was in my seat at 6 a.m. and I wouldn't get home until 8:30 or 9 at night. But it didn't cost me much extra time to drive versus bike, and I got 2 hours of cardio. So for me, cycling is everything. This favorite sport really is like, I have 4 kids. And so
That is a sport.
3 of them are older, right? 15, 13, 11. And so they all play competitive soccer, right? My 2 girls are playing on 2 basketball teams each with ballet and horseback riding in there as well. So like, my favorite sport is whatever my kids are playing because I'm driving
Yep.
them here and I'm watching. Like, I see hours and hours of games every weekend. So like, that's the only time I have. Like, I have time for pipe and I have time for like watching my kids. Like, my cycling now, because since we're fully remote, like, I have a bike right here, right? I'm on the bike at 8 a.m. every morning with Slack and like email on the screen. And I can work out for an hour, but still be present and I'm blocking my team and making sure stuff goes. So I just have to optimize my time ruthlessly to make this work. I can still find time for me to exercise a little bit, but it's multitasking always, right?
Yep. One surprising thing about yourself.
I'm a like small town Texas guy, right? Like, my father was a fishing guide on Lake Texoma for 25 years. So I baited more hooks and cleaned more fish than you can imagine. And my stepdad was a race cattle, right? So I grew up on a ranch riding horses too. So like, you'll hear my accent come back out when I start talking about it, I guess. But I'm a small town kid, like went to public high school in Sherman, Texas, you know? So it's a very different kind of background than a lot of the other folks I see here in Silicon Valley, right?
I mean, you've talked a lot about this throughout, or at least it's come through the screen throughout, given your enthusiasm for the product. But what's the most exciting part about your job?
I just love having highly engaged, highly motivated, excited teams to go solve the same problem. Like, we're all here to go help these small businesses succeed. And when we bring customers in to our all hands and like hear their stories or record their stories and like hear, like, we're recording one in Atlanta right now and I'm going to fly out to do it. But she was able to like borrow like 120,000 from us. And then she's an Atlanta-based like hair salon and was able to launch a brand new location in North Carolina because she borrowed 120. It was enough for her to literally double her business, right? Never like could not get capital from a bank, but like can double her business and expand geographically for herself. Those stories are so amazing. When you bring those back in, the entire team just gets more and more energized. And so I get excited about it. I get more excited to have my team like all in on this. Like, we're here to help these folks and it's awesome. It feels great to come to work every day. Very different than like distressed private equity where you may buy billions of dollars of resi mortgages and kick half the people out of their houses, right? Like, it's not fulfilling to go to work and do that, right? You can sort of justify it by saying, yeah, the Canadian pension plan or the Dallas Fireman's Fund is investing and we're helping them retire, but it's just not fun, right? And so to actually help people succeed and grow and like make some money and help people at the same time, like, that's what I like the best.
Especially given someone that is most likely never ever going to be served by a bank.
100%. Like, they just are blocked out of the system right now.
Yeah.
If you don't have a FICO score, you're not getting even a personal card, let alone a business card, right? This is just because we figured out the risk on just credit card transaction history, right? You can narrow down to that and then get paid back first in line to limit the risk. That allows you to serve populations that just couldn't be served before. And there's more than 10 billion a year of this stuff going out now between, I think Square is still the biggest, then Shopify, then Intuit, and then I think PayPal Working Capital and Stripe are down there as well. But there's going to be 20 billion of this in 2 years, and then 50. Like, it's going to be one of the largest small business lending offerings, I think, over time. And it's all going to be served within the software these businesses are using to run their business, right?
Yeah.
It's not going to be happening in the banks anymore. It's going to be happening in the software because that's where they are, right? Completing tasks, booking appointments, seeing the offer, drawing the offer. Like it just changes how banking is going to occur.
And then final question, one prediction for the next year.
1 year, um, that's tough, man. Like the longer term predictions are easier. I think I'm seeing it in my business and even with my family. Like AI is changing things so fast, right? So, like there was a book called Age of Accelerations that Brad, the CEO of Intuit, recommended the whole company read like 9 years or 8 years ago, whenever it was, but talked about how Hadoop made it so much faster to like, you don't need servers anymore to go run your business, to start a business. And then iPhone kind of changed everything in '08. This big shift happening right now blows my mind every day because my son, he's 15. Yes, he's been coding for probably 10 years now, but I gave him a challenge. I said, hey, can you figure out how to get AI to answer the phone, talk to the person that called, and then book an appointment in a calendar? And he went to Cursor and Claude and he just did it. Like the AI
Wow.
knew to use Twilio to set up the phone number and integrated the Twilio API like in one shot. And it knew to use the Google Calendar API to like figure out how to book appointments in one shot. And when my
Wow.
15-year-old can go do that and create a basic thing that can do something that costs like probably $20 per call, like with humans, right? Like
Yeah.
it just blows my mind. Like just one example like that, like if a 15-year-old can do it, like it changes the game. With 30 engineers, you can do what you could normally do with 3,000 engineers. It's just going to change the pace of innovation, and I'm so excited about it.
Well, Luke, it was great to see you again. Wish you and team continued success, and hopefully we'll get you back sometime in the future.
Awesome. Thanks for having me, Todd. It was
Yeah,
fun.
of course. Thank you.